Alrighty, good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update. This is round two for Tuesday. Apologies, everyone, if with the mic issues the first time around, but we should be functional now. Looking at DXY first, we did drop back to kind of the 105 ish, the 104.8 level, hovering around 105. Not the best looking candle, but it is still my belief that this will probably try and grind up and at least tag 105.9, which is the high from back in March. So we're seeing, some bearishness on equities, crypto, still generally flat for the most part, as we've kind of seen this thing cranking up since July. We're obviously, Bitcoin's still obviously well off those July highs from back up here. And, same situation with equities, July highs, all the way back here. So, if we are looking at the equities charts, we did drop beneath the support level of 44.30, and that coincides with currently the low of September. So we formed a new September low. Typically, that is a bearish signal, although you may see price, run back up maybe to 4465 before getting cut back down again. The way that I'm currently looking at this, and I'm going to get rid of these, just kind of restart some of this analysis, is I'm looking at this as a demand zone to then, possibly short, if we see a spike and it drops back beneath the 44.30 level, or possibly reclaim and jumping up to 44.65 for kind of a very similar move to this, form that new low. We jumped back up, and then we just dropped back down and formed a new low again. So we may kind of do something like this. Anytime you see a deviation beneath the low and then a reclaim, typically you're going to trade at least back into this kind of range. So something to watch for there. And then, maybe a drop down or that. We could still drop lower. This hourly is certainly not extremely convincing, but a lot of times that's what you'll see with, choppy price action, a lot of indecision as well. But it is my belief that probably towards the end of September, probably going to be, at least tagging this level, possibly even lower. Looking at Bitcoin, starting the hourly here, and what I was trying to say on the stream before is that there's a lot of both fuel for the bulls and the bears, and I'm going to try and walk through most of it for you. So we have a triple tap on highs here with a deviation up here. So typically that'll lead you back to the low end of the range, which is right here. We do have this bull trend kind of still valid starting from, September 12th all the way, with a tap on Sunday, and obviously still surviving now. So as long as price is above, the 26.6 level, bull trend is still intact. We would need to make a low beneath this to form a lower low, which, still seems, like it's a strong trend in my opinion. But the difficulty is we would continually be getting cut down up here. We could obviously still take it. This could just be temporary volatility, but definitely is worrisome. But then again, you are above the weekly VWAP. You are back above the 27.2 level. So if you're hanging out in this little area, you could still get cut back down, but definitely, more likely than not, if you're hanging out up here and still pushing up, it will push up, but it's not, entirely convincing. And then the other side of that candle is, open interest rose again, got cut back down. So, it could be bullish, but, there's a couple of worrying signs in my opinion. And then, kind of zooming out to the daily, a couple of things that I want to point out that I tried to point out last time are, the 1 day estimated 200 moving average. So, deviation, I don't know why is this on a delay? There we go. Deviation moves higher. Tap moves higher. Drops, breaks beneath it, nice little move. Deviation, moves right back down to the low end of the range. So, is this a possible deviation? Will this send us lower, or is this a possible reclaim where we just tag, 27 flat again and then move up higher towards, this high right here? But, let's kind of take that idea into account. Let's move back to the 4 hour. And so, something that I thought was interesting, especially for the bulls, which could, be a fake out. This is definitely a good target if you are bullish, 28.1. That is obviously the high from, it's not the August high, but it is the high from that grayscale pump back in August. And something I was pointing out, on the silent stream was we've got this low here. And I kept saying, multiple times afterwards that it was going to get tapped. It obviously did, on September 11th, and then, nice little zoom higher. So does that, same idea, will we tap this level before, possibly heading back lower? So that's definitely something to consider. And then you obviously still have this little level to contend with too, which was the spike before we dropped, which is 27.6. So, if we can break above that level, I would assume we're probably going to hit this level. You still kind of have some juice left in the fair value gap, which is why I've seen a lot of people say, 29K looks juicy, but it's not entirely convincing right now, just based on the continued reaction that we've seen, around the mid 27 level. So if you are bullish, I understand why. But also something to look out for here is bearish RSI divergence on the 4-hour, which is a pretty good time frame to use this type of divergence. So you got a couple of feathers in the bulls caps, you got a couple of feathers in the bears caps, and it's not something that I really want to jump in front of. I consider this to kind of be like a moving train. So another thing, feather for the bulls is RSI 56. So we are above that level right now. Last time we got above that level after continuously being rejected was the June pump, and that obviously sent us pretty high. So, if we do close above the 56 level, that's another feather in the bulls caps. But if we do get cut back down toward, there's still 6.5 hours left until the daily close. Still a lot of time, especially with the 4-hour bearish divergence. So if we do drop back down to, let's say, 27K, this RSI will probably drop as well. And then, kind of decreases the, all the gusto from that kind of move. So a lot of interesting things. And, looking at the 12-hour, also, 1 hour or 12-hour estimated 200 moving average tap here, immediate rejection, grayscale pump. We've had 3 taps so far, cannot break above it. We've continued when we've gotten rejected each time. And stock RSI does look like it might want to pare back a little bit. Last time we had a stock RSI cross and a decrease was grayscale candle on the tap of the 12-hour estimated 200 moving average. It dropped back down all the way to, obviously reset, send prices way back lower. Will that happen again? I don't know, but it's tough to argue with these kinds of things. So I understand why you are bullish if you are. It makes sense to me, but there are too many bearish indicators, in my opinion, to support buying at this level. If you did buy in the 25s, if you bought low 26s, congratulations. I wouldn't start cutting that until we make maybe a lower high or convincingly break back beneath 26.8. But if you're buying here expecting to run to 28 or higher, I think it just doesn't look attractive. I don't want to say anything disrespectful, but it just does not look attractive to me. So looking at ETH, talking about level of unattractiveness, ETH BTC got clobbered pretty hard. It's actually looking very similar to what's happening in the equities, and obviously these did jump higher. So we are back in this little demand zone here. ETH BTC did drop lower, made a completely new low, I believe for the year. Let's zoom out. So I want to say this. Yeah, this is a new yearly low. Because this is where did the year start? Yeah, the year started up here. So we made a new yearly low. Not a good sign, but it could just end up being a deviation down here. It basically just swept that low from back in June. So does it head up higher up here? I don't know. That's certainly something that you can take into account in your thesis, but I will say making a new low, not always the best sign, in my opinion. So what it needs to do for me to be convinced of, some serious bullishness from ETH over BTC is it needs to reclaim that 6th level. It needs to do it convincingly. I would say it probably needs to make a new higher high, at least on the lower time frame. So in my opinion, it probably needs to get above 0.61, 0.614. And then you can really start to say, okay, ETH looks like a better trade. Because you have to think about it. Bitcoin is clearly, Bitcoin is the ETF. Yes, there's been ETH ETF applications, but the Bitcoin ETF is most likely to be approved. Gary Gensler hasn't. Gary's been very shifty around talking about Ethereum. He's been very very direct about talking about Bitcoin. So I think Bitcoin is still the more attractive asset compared to Ethereum. Obviously, that was exampled today by making new lows against BTC. And if it cannot reclaim and make a higher high, it's going to continue to get cut down compared to Bitcoin. And as you can see here, just looking at Bitcoin, we swept the Monday high. So the Monday high and the Monday low are always very important. And so we swept the Monday high today, which also gives another indication of, are we going to sweep the Monday low heading into Wednesday, Thursday? Remember, FOMC is tomorrow as well. So looking at Ethereum, let's go ahead and kind of normalize this a little bit. Remember, Monday high right here, Monday low down here. We didn't even sweep the high, which just shows weakness, especially since Bitcoin did. And then we've got this low down here. So we don't have the 3 tap like we do for Bitcoin to really give it a really good short. And it obviously is holding up above the weekly VWAP, and it's kind of forming this nice little mini range. So ETH doesn't look half bad here. But you do have to remember, if you are bullish, Bitcoin's been moving harder than ETH and may continue. So if you are trading, I would prefer Bitcoin over ETH. But obviously, with the ETH BTC chart, watch for that reclaim and push higher, as that could be an indication that ETH ends up being a better trade, at least in the near term. So let's kind of zoom out a little bit to the 4 hour, see if there's any divergence. That's not, I guess that is valid divergence technically, because it is kind of moving higher while that moves lower. Bit of a weak divergence in my opinion, but it's there. And then, rejecting off the 4 hour estimated 200 moving average right here. We also rejected back in late August. And then obviously the multiple, rejections just riding underneath that 4 hour estimated 200 moving average back in July into August is what, really dropped us lower. So, this is a critical level, whether you want to admit it or not. And, continuing to grind underneath it has obviously been historically bearish. And so, looking at the 12 hour, pretty far away from those moving averages. Looking at the 1 day, pretty far from those moving averages as well. Similar to Bitcoin, deviation pump, deviation pump, deviation pump, drop beneath it, drop. And then we haven't even tagged it. So this isn't really valuable. I just wanted to show the comparison of weakness of Bitcoin compared to ETH, because as you can see, or as you remember, Bitcoin was tagging those levels and ETH is not. So in my opinion, again, still with the FTX situation, with everything going on, I'm personally going to be a bear. Doesn't mean we can't squeeze higher. I would just prefer to short moves rather than long moves, because in my opinion, the forced selling, the macro situation, equity is dropping. None of this gives me confidence or excitement. And so I would prefer to continue to short. I do think that if you are shorting, or if you are a bear, this is a pretty good risk reward opportunity, with obviously putting your stop at the most recent high. It's only $200 below the high. So you could put in a decent little leverage short. But in my opinion, I technically missed that high. I definitely, it seemed like we were wanting to break out, but we did it. So I'm just going to play it patient. No need for me to overextend my money. There's a lot of signals in the bulls and the bears camp. Bearish divergence. We didn't sweep the low. We got rejected multiple times, but on the bulls, we're above the weekly VWAP. We're above the 26.8. We're above 27.2. We're still hovering in the demand zone. Open interest did sell off a little bit. It could definitely still move higher without really, messing too many things up. And DXY is not really pushing higher, and then equities are trying to recover. So there's plenty of stuff if you're bullish or you're bearish. But after seeing this multiple rejections today, I'm just going to walk away from it. I'm going to look for a better trade. But if we do jump, let's say we jump up to maybe 27.5, 27.6, then we deviate back lower, I'll probably end up shorting something like that, because basically what I'm looking for is similar actions to this with follow through. So spike above the recent high, drop back down, short, and then hope for follow through. And then if there isn't follow through, especially around the weekly VWAP, which we know is a critical area, close it, wait for something else. And so I think that's a really good strategy. But for me, I'm kind of looking to get into something a little bit longer. Not really looking for 15, 30-minute hourly scalps. So I'm just going to continue to play it patient. Of course, I'm not going to suggest what you guys do with your trades, but in my opinion, I think you can take it easy. If you bought lower, you're sitting comfy, just be patient. If you're looking to short higher, you can also be patient. So good luck. Happy trading. See everybody tomorrow.